Hi everyone, hope you're all doing well, and today I'm going to talk about this. I saw this the other day and I went, what? And it was a statement that said, Boohoo is overvalued. And I saw that and I went, give over, yeah, you're having me on here. And I generally saw this and I thought, the thing is about stock market is a game of opinions, right? So you have Tesla at $1,000. There's going to be people that buy Tesla at $1,000. There's going to be people that sell Tesla at $1,000. It is all a matter of opinions, and everyone that comes on and watches my videos won't have every single stock that I have and go, yep, I think that's a buy and that's going to be a sell. There's going to be a lot of different opinions out there. But there's some certain things where you go, now you're just being silly. And for me, when I saw that statement, I thought, everyone's entitled to their own opinions. But when I saw that, I thought, I just can't do anything but totally disagree with you. I think that right now for me, Boohoo is staring us down as one of the cheapest, the best UK stock to be buying right now. And for me, I think it is an amazing company that's massively sold off, and I'm loading the boat on it. And it is my biggest UK holding. And when I saw someone actually come out and say that Boohoo is overvalued, I went, how are you getting to that point? Because I look at Boohoo right now and I go, even if I was paying up for this year's growth or next year's growth, it's crazy undervalued. And then you're not factoring that in, that I'm a long-term investor and I'm thinking, where's this stock going to be in the next kind of 2 to 5 years? And I start factoring that in and I look at where Boohoo's going to be at the current prices, and I'm like, this is just an absolute bargain. And that's why I'm absolutely loading the boat on this one. So today I thought, you know what, rather than just kind of saying it, I thought, why not go a bit more in depth on that? So I think we'll do a bit of a Boohoo video, and today we're going to do that. So we'll get stuck onto why I totally disagree that Boohoo is currently overvalued at these sort of prices. So first of all, one key point I'm going to add in, Debenhams. Debenhams will come into these financials in the next coming few months. It has already started to open up. Debenhams is back operating again and starting to get back to full capacity, and with Debenhams now into Boohoo, that is going to be an amazing brand that stops Boohoo from being more of that kind of 16 to 24, 25 year olds kind of brand, and now expands to an older age range, I guess. So I think Debenhams is a massive part of what's going to come into this company in the next few years, as well as that will also help Boohoo expand into the beauty range. So it's going, not just being a clothing brand right now, expanding into that beauty range. And the Debenhams itself, I think Debenhams itself was like one of the top 10 visited UK sites or e-commerce sites 2 years ago. So it's a massive site with loads of online traffic, and I think this is really going to help it. So you got to consider that's going to come in the next few years. Now, in general, the stock price hasn't done amazing. If we look at the stock price, it's not looking good. And it's been very volatile in 2020. A lot of that was due to the factory situation. But in the same time, people forget this. People always look at the share price and then shout out where it is right now and going, that's a bad investment. It's terrible. But you got to remember, in 2020, we had the factory situation, which wasn't anything directly to do with Boohoo. It was their suppliers, and their suppliers not doing the correct procedures there, and Boohoo got tied into it, even though it had not much control over it. And now John Little, who I think has done a very good job in the last kind of 12 months of managing that situation, has kind of got that back all under control. And I think that worry of why the share price didn't do amazing in 2020, that problem is now gone. But the thing is, you've got to remember, in 2020, in Boohoo, I personally still made very good money in Boohoo. There was times where I was buying Boohoo at the £2.50 range, and then it was going up to £3.50, £4, and I was taking some good amounts of profit off the table at them top price ranges. So there's always a few people that go out and go, oh, Boohoo's down, it's a terrible stock, but then people weren't saying much 12 months ago when we were making good money on it, and that's what you've always got to remember. That's one thing. But that problem there that I think held the share price back a bit in and made it very volatile in 2020, in my opinion, that problem's now gone. And let's not forget that factory situation did not affect the profit, it did not affect the revenue. And when I look at the stock in the next kind of 2 to 5 years, will people go, oh, I'm not buying Boohoo because of that situation 2 to 5 years ago? Not in my opinion. And next up as well is logistics. So I think obviously since 2021, the share price hasn't done well on Boohoo, and it's been downtrending since about the February, April time, around about that range. The stock price has just been trending downwards. Now, there wasn't really any reason for it trending downwards really, but through the next kind of couple of months, it came clear that logistics is going to play a bit of a problem. But in general, it just wasn't growth stocks what we've seen most of this year. Growth stocks just aren't really in favour. So I think it was already trending down from that, and as well as that logistics side of it. Logistics now are causing a little bit of a problem, which once again I think that's short-term problems, because I think either logistics will sort itself out and the cost will kind of come down, or what will happen is everyone will kind of just raise the prices, and that won't affect Boohoo because the prices will cover the increase of logistics. And that's the big thing, is there's just that little margin problem at the moment. So a few people are looking at this going, oh, the hit on margins, is that going to be short term, long term? In my opinion, it's short term, and we'll go back to the better margins. So once again, I look at this one thinking this is short term. And let's not forget, Boohoo is back at prices it was at 2019. So if we look at what the company's done in that point of view, revenue's gone from 1.13 billion to 2.1 billion. That's a massive increase. That's nearly a 2x on revenue in the last few years. Massive increase. Profit's gone from 62 million to 69 million. Now, if it wasn't for these logistic problems, that would be a lot higher. We'd be talking that pushing up to like the 90 million range. So yeah, that could be even better, but obviously because of the short-term hit at the moment, it's not looking as good, but still we're moving in the right direction, and I think that will sort itself out. So you look at the progress in the last 2 years, fantastic progress from this company. And overall, let's not forget, this is one of the stars of the UK stock market. You know, you're talking about a company here that has really good profit and profit growth. You're talking about a company that has revenue growth, fantastic. For a profitable company to still be putting in 20-30% revenue growth every year is fantastic. You know, this isn't a normal company that grows 3 or 4% every year. This is a gem. You know, you've seen stocks like Greggs that trades at 30 times earnings, that has 10% revenue growth. You look at the likes of a Cake Box, which is probably going to grow, 10-20% revenue growth. That's trading at a 30 times earnings. You're talking about Boohoo here that's going to be a profitable company growing at 20-30% revenue growth. Now, them sort of stocks aren't your stocks that trade at your average valuation. Those are the stocks that deserve to trade at a premium, and people normally are willing to pay a premium for it. And at the moment, it isn't happening, but it will do. Look at the likes of Revolve. Revolve is a stock that we made good money on. I think 2 years ago. I started buying Revolve, which is a very similar company to Boohoo. It charges more for its products. Once again, you look at that one, the revenue was increasing, profit was increasing, and the valuation, it went down to something tight, something trading around like 19 forward earnings or something, maybe even lower than that. And you're thinking, well, what's he doing that for? This is a premium company. And what happened within the next kind of 12, 24 months, the stock went boom, it shot up. And I think Revolve went from something like, I can't even remember how low it went. It's something like it nearly went down to $10 or something. I'm probably showing you right now. And then it's gone all the way up to whatever it is right now, which is, I don't know, is it $60 or something? So that's this very similar company that investors are just slow. That's a company I made really good money on. Sometimes investors are really slow at picking these things up and going, why should we not buying that? We should probably buy that. And then people went, oh, and then it just flooded in, and it absolutely exploded. And Boohoo is very similar. I look at Boohoo and think that the same sort of thing is that people are going to look at Boohoo and go, this is a really good company that should be trading at a premium. And look how cheap it is. Like, it's below what you would normally buy a company that had nearly no revenue growth on. And then once again as well, it's got an amazing balance sheet as well. So let's look at the numbers. So this is 2022 here. With a growth company, you should really never look at what the company's just done. You should always look ahead. So I don't really want to use this, but I want to kind of show that why Boohoo is currently not overvalued right now. But especially when you look at longer term, I mean, what you're going to have here is absolutely amazing. So what I've done is I've done revenue of 25%. Now the reason why I've done 25% is because I've just been conservative. Now Boohoo potentially could do 30% revenue growth, but I thought I'd be conservative around do 25%. Now margins, I've done 2 examples. I've done 3% to 5%. Now that could be different things, because obviously 3% would suggest logistic costs stick with the company forever, and also Boohoo wouldn't combat that and just leave the prices the same. I don't think that's going to happen, but as always, I plan for the worst case scenario. So if the worst case scenario happens, will I still make money on this investment? And that's what I've done. But realistically, I think Boohoo will get back to doing 5% margins, which what they've historically done as well. I like going off historic values or what they've done previously. Gives you a good idea what the company will do. So going off this year, so in the next few months when Boohoo finishes is financial year, Boohoo is going to do probably around 2.13 billion. Now, in 2.13 billion, let's say we do a 3% profit margin and a 5% profit margin. Now, obviously, we're probably going to be doing this one because the logistic costs are going to happen for the rest of this year, or they have been happening for the last few months. So that's probably more than likely what's going to happen this year. But if it wasn't for that, which I think is also really important to say, is that we would have been around about 106 million. Now, there's loads of different measurements you could do. I just thought I'd go off price to earnings, just a very common one to use, very easy to understand. So I thought we'd use that. So just on that point of view, and let's not forget, Boohoo typically, historically, trades around 40 to 60. So I think the average Boohoo is normally, I just checked a while ago, actually, I think it's 45, I think it is. I think the average P ratio is 45. So, but normally it trades around a 40 to 60 range. It never normally goes below 40, but it has done. Now, at the moment, that will mean that Boohoo is currently around about 33, which isn't too bad. So you would be paying up 33 times earnings for this company that is a revenue growth beast, a profit beast, and it's probably doing numbers that it probably won't do going forward, because let's not forget, it's probably not going to do that 3% margin going forward. If it wasn't for this logistic issue, we would potentially talking about 20 times earnings, which once again, 20 times earnings, we're talking that this is normally 40, it's normally double this. So when you look at that, you're like, wow, that is absolutely insane. And even if you look at the worst case scenario, logistic costs are still really bad. 33 is really cheap. And I think that potentially over the next kind of few months, we actually won't see 3%. I think we could see Boohoo maybe get actually around to the 3.7%, which would not be too bad, because you think about that extra 0.7%, that will actually bump up this the profit margin quite a bit. So once again, you look at them numbers and I think it's just extremely cheap compared to its historic value. So I think even worst case scenario, there's no doubt that you can argue that this company should at least be a £3 stock. Now, I think if investors were wise and actually thought about the long term, you'd be actually willing to say that a fair value for this would be up to £4, in my opinion. I think you could argue that if Boohoo right now was actually £4, and you think, okay, that little problem they have at the moment is going to go out the window in the next few months, I think you could argue this is fair value as well. I think you can argue that this is a £4 stock easy. Now, once again, you look at the range that this company is trading at, which I think today is currently something like £1.70, is it? That's the worst pound sign I have ever done in my life. But I think it's about £1.70-ish today, I think it is. Now, once again, this is worst case scenario. Worst case scenario, I think this is easily a £3 stock. So you're looking at the upside from these sort of prices here, and this is why I think it's an amazing bargain right now, loaded in the boat. For me, you look at the upside on the worst case scenario and you're like, this is just absolutely crazy. And then you look at what potential it is in what you could be willing to pay for it if you look past the short-term issues. Massive amounts of upside. And let's not forget, like I said earlier, this is 2022. This is what we're going to be doing. This is when the financial year closes in the next kind of couple of months. This is 2022. If you're paying up for a growth stock, you're making a schoolboy error if you are working it off numbers that you are doing right now. You should never do that with growth stocks. You should always be looking ahead. Now, when you start looking ahead at Boohoo, is that right now you can see that this stock is definitely undervalued, but when you even look at the longer term, then you're like, wow, these numbers are really going to be impressive. So let's just go 12 months, or what you would say maybe 14 months down the line. Let's actually start looking ahead. Let's do what you should do with a growth stock and actually look where it's going to be in the next kind of couple of years, or even, well, not even a couple of years really, we're only going down a couple of months down the line. Let's go to the end of the financial year of 2023. So yeah, I mean, we're not too far off this one. Now let's say that Boohoo now, does 25% revenue growth. We go up to 2.66 billion, and let's say that they are still not improving their profit margins. Like I said earlier, I think this will be sorted out. But hey, I don't want to be like, oh, best case scenario, what's going to happen? Best case scenario. I want to give you best and worst. Let's say worst case scenario, they're still not improving the profit margins. Logistic costs are still here. Boohoo haven't increased the prices. That means they're going to do 79 million. Let's say they've all sorted now. Let's say they've gone back to the 5% margins, 133 million in profit. Once again, that means it's going to be at 27 times earnings, worst case scenario. Let's say best case scenario is going to be 16 times earnings. Now, once again, this is then when you start looking at this going, whatever you want to do, worst case scenario, best case scenario, there's no way that a company at Boohoo standards is going to trade at these sort of valuations, in my opinion. And once again, then you start looking, okay, even only a few months down the line, or a year and a bit down the line, we're going to be talking about a stock that is potentially at least going to be £4, or could go all the way to £5.50. And then you start talking further down the line. What you want to do as long-term investor is not look at what's going to do in the next kind of 24 months. You want to go probably that, 24 months to 5 years down the line. And if Boohoo puts in this 25% growth rate, I mean, look at this. From 2022 to 2025, we're going to be talking about a company here that goes from 2.13 billion to 4.158 billion. I mean, that's nearly a 2x in revenue. And that's how quick you compound when you grow at the rate that Boohoo's doing. That's really, really impressive. Worst case scenario, logistic problems still exist, 124 million. Let's say they don't exist, 207 million. I mean, that's going to put you down at a 17 times earnings. That's going to put you down at a 10 times earnings. And yeah, I mean, that's where you start talking about if it keeps up the growth and it sorts its logistic problems out, that's where it starts getting really impressive for this sort of company. And I think that when you start talking longer term, I think you could be talking Boohoo goes anywhere between the range of £5.50 to potentially £8.50, in my opinion. So I think that is, once again, and this is all me going off fair value estimates. This isn't me kind of going off a kind of point of view where I'm going to be ultra silly and say that Boohoo is, trading at the high end of the spectrum. This is all being quite conservative, really, and a bear case and a bull case. And like I said, when you look at the numbers that they're going to potentially do, I think it's so impressive. And like I said earlier, is Boohoo overvalued? Well, in my opinion, if you look at what the next kind of few months, right now it's undervalued. And then when you actually start thinking with growth companies, you want to be looking at what it's going to do in the future. If you look at what it's going to do in the future, I mean, numbers are going to put in, even worst case scenario, saying that this stock is undervalued. And this is me being conservative. When I start talking, we get the short-term problem of this happening, the logistics, once that's out the window, we go back to doing our good profit. It's extremely cheap. So yeah, for me, like I said, it's a game of opinions, the stock market, but it's one of those for me that I saw someone that gave this opinion and went, I can't understand it because for me, whatever you want to look at, if you want to be conservative or not bullish to Boohoo and say that the problems are going to last, you can't argue it's overvalued, in my opinion. And that's what I'm saying, is that I'm very happy to keep buying this one because I think this is an amazing opportunity for a UK profitable growth stock, which I think is amazing. So yeah, thought I'd talk about Boohoo a little bit. A little bit of a geeky video, so I hope I didn't bore you anyway. But yeah, hope you enjoyed it. Hit the like button. See you in the next video.